Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's December the 9th. I forgot to let everybody know Friday that I wouldn't be trading today. I did not trade today. My wife had one of her checkups with the doctor today, and I can report that all is well, and she's still doing well, still cancer-free, so that's a blessing for us. But I did not trade today because I was with her at the doctor. And so I'm just going to, this is definitely all evaluation at the end of the day after the fact. It's a range day for the most part. You got a couple little trends up and down in the range. But today's a range day. Nothing else you can say about it. Uh, it we had a channel early. There's also a gap here. We could not fill the gap. We came close. We got within maybe a point of filling this gap. They did fill it in the overnight. But if you don't have 24-hour data, because I have 24-hour data, you don't see the gap. But normally the market closed Friday here, and if you're just using regular trading, 8:30 opened here, and so in that case there's a gap there if you don't have this data in there. So and that gap is important. Even though the market trades 24 hours, there's still a lot of people that look at the 8:30 open and compare it to the past close. And generally those gaps are closed fairly quickly, but they couldn't close it today. You can just see how strong that support was. And this is a very clear-cut high on this range and a very clear-cut low. Uh, Nothing really out of the ordinary. Uh, Fairly easy trade. You can generally get these trends, like I said, follow your trend line and your rules, and that should keep you on the right side. One couple of quick things. People always ask me, how do you know how to trade? What is the difference between trading a range and trading a trend? And it's very different. When you're trading a trend, let's say you're trading this uptrend, the only thing you're looking is for reasons to get long. You don't you don't take any shorts here, and you're just looking for pullbacks to the EMA and the trend line with following our rules and our setups, and that's it. That's all you're looking for is longs on a trend like that. If the market's trending down and in a clear downtrend, you're only looking for reasons to get short. Long traps, pullbacks to the EMA, and pullbacks to the trend line. That's it. We don't go long unless there's a break of a trend line and a trend reversal, which you actually had right here. You can see this. I had a little channel working down right here. And you had a break of it, two legs down to a new low, and then it reversed, and then it was uptrend. So you couldn't start looking for longs until you got this little confirmed reversal right here and started going higher. Then you could look for longs. So again, I'm going to clarify that one more time. In a downtrend, you're only looking for reasons to get short. Pullbacks to the EMA, pullbacks to the trend line, and long traps. In an uptrend, you're only looking to get long. Pullbacks to the EMA, pullbacks to the trend line, and short traps. And there's a nice short trap. Notice all those matching lows. It broke lower, trapped everybody, and turned up. So, but on a range day, generally your best trades are always shorts off the highs and longs off the lows. And yeah, eventually all of them will fail. So one of these eventually will fail. But that's why you can't watch it all day and then decide to take the one late in the afternoon, because that's the one that'll probably fail. But when you got these little trends going up, you can trade these trends, especially if they're clear cut. But if there's any doubt, like this one right here, I'll talk about when we get there, skip it. And this one, I was torn about whether to make this one green or not, but I'll explain why I didn't. But anyway, I want to show one other thing. People always have liked when I show other traders' performance. I had another trader. He sent me his performance a couple of times, but the last couple of times he sent it to me, I wasn't trading. I'd already done the video or something, or I had taken a day or two off, and then it got lost in the shuffle. But I'm going to show this gentleman's performance. This is another guy, is a price action trader, has been following our stuff. He's using basically our techniques. And you can see from November the 18th till December the 5th, he had a little over 225 points. Pretty doggone good performance. So, and this is not the same guy I showed last time. This is a different one. And if anybody else wants to send me theirs, I'll try to pop it up too, because people like to see that somebody besides Mack can do this, and I understand that. I get that. Um, it can be done, and there are people doing it. And it's not just me saying that people are doing it. People are doing it, and here's somebody else's performance. And he's only this gentleman's the only one that sent me anything today, so he'll know who he is. He'll know this is it. He'll probably recognize that this is his profit report anyway. But just in case there's any doubt, and if you're having success and you want to send me yours, I'll put it up here and show it as well. And I know there's some more of you out there. A lot of times people don't like to show their performance. I'm a little leery about putting my stuff up here too. This is not about me. It's about trading and learning how to trade. And but this stuff works. That's all I can say. But there it is, another person's monthly performance, and pretty doggone good. I think most of you would like to be able to say you could make 230 to 40 points in a month. You could do the math on that, and let's just say 230 times $50. Well, that's a nice $11,500 a month right there. So I don't know. There's a lot of people who wish they could make $11,500 a month. Working 50 hours a week. 8 or 10-hour days, and most of us traders only trade a few hours each day and do this. So anyway, that's enough of that. Let's get back to the chart, talk about the trades, and I'm going to wrap this up. And I'll be back to trade with you tomorrow, barring any unforeseen emergencies, and we'll try this again. So, but anyway, let me show you what I saw today. It started out looking a little rangy. You can see that. At 7 o'clock this morning, it's looking a little rangy. You got your highs right here and your lows down here. You've got this gap, but you got these two swings here. And you might have drawn your line off them. You might have even been looking more at something like that. But either way, you get your break, and you're looking for a retest here. And but if you draw it right off those bottom swings right there, let me redraw this. That's how I originally would have probably drawn mine. It's harder to say doing this after the fact, but it's all still here. And if you can do it during trading hours, you can do it, after the fact too. But you probably, at the very least, you should have had that trend right there. You get the break. You're coming down. You get a second entry long here. It's a failed break below. Notice all those matching lows right there. You got a little double bottom. If you use the most of the closes, it's right across there, and you see it pulls back and retests that same area and then goes higher. And a real aggressive trader probably would have taken this second entry long here when it broke, because it's a trap as well. When it broke below that little double bottom there and immediately turned up, you probably would have thought about having a stop right there. At the very least, when it broke higher, an aggressive trader probably would have dropped a limit order in there just to see if it'd come back and fill it. And it does, and you could have got filled all the way back to right here at that candle's close. But most traders would probably wait on a second entry. So it keeps going higher, it pulls back, it ticks lower, and then it turns up and you get a second entry right there. If it weren't for the break lower in the trap here, I would have probably made this one green as well, because there is some overlap right there. It is kind of congested looking, but notice how all the closes are above the EMA, and it broke down and it closed higher, and it's gaining some momentum. By the time you got this nice bullish bar, I would have considered entering that for certain, and probably just use a stop. You might have used the limit order. If you got too conservative there, you probably missed that, but at the very least, limit order at the top, probably just a stop. I don't know if it would have filled a limit order there. I wasn't here to watch it. Then you get a trap here, but you're right here at these highs, so it's a little bit, iffy. But if you're like me, you're probably drawing your measured move, and you're looking, and there's still a little bit of room left to get, to scalp out with a measured move. So you might have gone long right there. I probably would have used the limit order on this one. And if you didn't, I think it might have been a 4-tick failure. 1050, and it was 1150. It's a 4-tick failure most likely. You could have gotten filled because it bumped on that multiple times, but I'm guessing it's probably a 4-tick failure. So when this one ended as a doji, I would have considered exiting on this bar. And if I didn't exit on that one, when it ended as a doji, I definitely would have got out on this bar. So you could have easily gotten out with a tick or 2 or 3. Maybe, maybe even 3 ticks. It gave you multiple opportunities. Take it. Don't fool around and let it back up on you. You don't know that it's going to come all the way back down, but I don't even want it to come back and go against me after being in it, that long, especially on a trap. If you don't get filled on a trap, something's wrong. And so if you didn't get filled up here, you better exit before all that happens. So then there's a possible short here. But again, it's a little aggressive because you don't get a second entry really. It's kind of let me show you this. Notice all those matching lows. Let me make it a little bigger. Notice all those matching lows right there. Where'd it go? And it breaks lower and it kind of turns back up. And then this bar breaks below it. So that's like a breakout pullback short. So when that happened, I felt like an aggressive trader would probably go short right there. You might have even just thought about when it broke lower dropping a limit order in there, but I think that's risky because it could easily go higher, even if it's still going to go lower. You just about always need to wait on a second entry off of these, unless you get a really good setup bar like that one. And even then, I felt it was worth waiting on the second entry. You might have just entered right there and it would have worked, but it's better to wait on a second entry, especially off the highs lately, because we tend to keep going higher. I'm more apt to be a little more risky off the lows than off the highs lately. So then you're just working your way down. You do get a second entry right here, but notice that's not rejection off those lows. This is what rejection looks like. It turns straight up and shot up. Here it's just chopping around and keeping going. It keeps going lower. And then you get the failed break lower. You get a new low on a range day. You just about always can fade those. So an aggressive trader knows that and would probably just go long. You did have your break there and a new low too. You really had a break here, so it's like a break and new lows, 2 swings to a new low. So aggressive trader would have taken that. Everybody else probably should have waited till here, and that's what rejection off that low should look like. Look at that move up. Boom. You can't wait and go long way up here, though, because you've missed too much of the move. You had to go above this bar right here, or at least drop a limit order in there, and I doubt you would have gotten filled. Then you get a failed second entry short here. There is room to get out before you get to these last highs. It is bouncing right off this trend line. Everything's above the EMA. Definitely some people probably got trapped on that break lower, so I like that one to go long. And what I probably would have done was drop a limit order, and it would have gotten filled all the way back to right across where that black line is right now. So you can see it ticked lower right there, and then it went up. I already talked about this. Aggressive trader might have gone short right there, especially if it broke higher first and then turned down and broke lower, which it looks like it did. Let me get that out of your way. And this is kind of a little pull back to retest, and then it turns down. So that's where I like going short. There was another break higher here that failed. So you might have even thought about going short there, but you're back down here. You look how everything's getting flat. They're stacking up, and you're kind of swinging to both sides of the EMA. It's better just to stay out of that whole thing. And that's why I didn't mark that one. I probably should have just pulled this lavender all the way over here. It does look like a channel coming down through here, and so it would have been tempting to go short here. But when you're swinging to both sides of that EMA and it's flat like that, you better stay out, because this is exactly what would happen to you. And I don't even like, even though it's a failed second entry short, I don't even like going long right there. I think it would have worked. 1810, yeah, you would have gotten just enough to get out. So, but I just think it's too risky, because it's definitely a trading range, and you had a little failed break lower, and then you had a little failed break higher, and then you went down. And you don't want to enter below that bar unless you're being super real aggressive trader. Probably would have, and it would have worked. But again, I would wait on the second entry off these highs, and that came right here. Um, Easy scalp, and if you stayed with it, probably no runners, but if you stayed with it, you might have ridden it a little bit lower, all the way back down here to test these lows. And this is where I would have that line right across there. That's where you get the most touches with the closes. Um, so that's what, and actually it might have been down here by this time in the afternoon. So that's what I saw today. I don't think it was worth trading this late in the day. There is a second entry right here, but it looks too much like this. I wouldn't have taken it. And you see it did come back. So then you had a trap. So you might have thought about going short there, but then you're too close to the lows. So I just don't think there was anything worth fooling with right in there. I think it's too dangerous. And we'll just in case any of you were still trading then. And then it's too late in the day after that. And you can see prices just didn't really do anything. But if you drew your trend, if you had this channel, you had your break, the retest, then you have this channel, the break, the retest, and you got this channel, the break, the retest, and that was all I marked for the day. So all the channels are there. You got this little channel here. You got a break, two legs down to a new low on a retest, and then it reversed. So draw those short-term trend lines. If you were using this one, you got the break and a retest. So you got it either way, no matter how you saw this. So that's what I saw today. I'm going to wrap it up. I'll be back to trade with you tomorrow, and hope you had a good trading day. And we'll be back to do it again tomorrow. But this is Mack with PriceActionTradingSystem.com, and we'll see you next time.